Hello, everybody. Welcome to the first video of the video mentorship. Today, we're primarily going to be talking about structure, and this is just pretty much going to be a review of things you've probably seen in the past, and this will be the only video pretty much of review, right? With that being said, I kind of want to go over things we already know about, such as, very simple structure, right? A little bit of advanced structure, right? We're going to touch on Wyckoff, but not get in too much detail about Wyckoff. The reason why we're not going to go into extreme detail about Wyckoff is because Wyckoff is actually now a form of a trap, and eventually in future videos, I'm going to have to show you how to trade those traps, right? We're going to be going over today continuations versus reversals, right? The differences between institutionally funded candles, IFCs, and our IFCs, which are refined institutional funded candles. We're also going to be reviewing what POIs are, so point of interest, and OBs, order blocks, and supply and demand. And then lastly, we're going to cover institutional order flow versus the lower time frame order. So to kind of get right into it, right? I don't want to make these videos super complicated. I don't want to make them super long. Yes, there will be a core 5 videos, this being the first core video. However, you guys are going to be receiving a video every other day, if not every single day, into the video library, where you will not only be receiving my breakdowns, but as new content comes in the future, I will just be constantly uploading that content to the video library tab because I want you guys to have as much information as possible. So if I so happen to miss something in these first 5 videos, I can almost guarantee that you'll have all the information in the world as these weeks go on. And, with the video mentorship, you guys do have lifetime access to my Discord. You'll be with me forever for the most part. So feel free to ask as many questions as you can. I encourage you to ask so many questions because, the more that you ask, right, of things that you don't know, the more I can help you. And that's kind of the goal and strive for these videos and mentorship. So to get into some of the structure basics, right? What are the structure basics? The basics of structure is pretty much identifying higher highs and lower lows. Pretty much everything that everyone has learned in the past, right? If you can understand the direction of the market, if you can understand the structure of the market, you can in turn understand the direction of the market. Now, we're soon going to realize that structure is not what's going to tell us the overall direction of the market. However, it will help us find very specific entries that, we might want to find within a very specific session, such as the New York or London session. Now, how do we mark up structure, right? Well, a lot of you have probably seen diagrams in the past, which have primarily shown higher highs and higher lows, right? And a lot of you are probably taught, right, that these are all the extremes, right? Extremes being the outer points of structure, right? And you are pretty much taught that once there is a break of structure, we can then trade to the lower extreme within the trend for price to continue, right? Well, in reality, what happens today, what's a little bit different, right, is that we don't really trade structure point to structure point anymore because a lot of those structure points actually become something called the smart money trap, right? So in reality, what's going on now, and you guys have probably seen this as well, is that price will extend all the way up to here. You'll have your break of structure. Price will retrace, but it won't mitigate to its lower extreme. It'll have another break of structure, right, which will create, again, another structure point here. This structure point actually now becomes the inducement to this POI, so price will actually come back, break through that, mitigate, and run, right? And that would be an example of a continuation for structure. Now you're going to see with my strategy, right, that I don't really trade old structure points. I really only trade current structure, right? And why is that? I'm a big believer in time and price, and I am a big believer in the proximity of OBs. And you'll see as time goes on that I'm primarily trading current market structure. Now, how do we understand structure from a fractal standpoint? And this is where I'm going to constantly break down structure into live examples. I do believe in diagrams, but as discussed in my mentorship program, most of you should already have a basic understanding of SMC. So I want to go ahead and jump straight into my strategy, how I use structure, right? So the first thing I normally do from a structure standpoint on the daily is I usually start off either on the weekly or the daily. I'm not a huge fan of the weekly. I know a lot of my students like to trade the weekly time frame and use the structure points on the weekly time frame. However, once we start getting into injections, you'll see why I don't really use the weekly. But the way that I identify structure is quite simple. I scrunch out my screen, right? So I'm able to see all the highs and lows that are being developed, right, throughout the months of price, right? We can see here, right, that we've clearly created a high, right? We then had, I'm going to make daily structure blue, a low and a high form right here. However, that low and this high were then wiped out by this low and this high, right? Allowing me to get rid of these 2 points here. Why? Because price swept these lows and then created EQD here, right? Telling me that these are the 2 main daily structure points, right? And as most of you know, we just continue the structure down until we can't continue it no more. All right. So what can we tell so far about the structure points that we have been given, right? Well, we can clearly see what happened here. Remember, I just said in terms of continuations, we need to look for a very specific structure setup in order for us to hit these continuations. Well, what happened was, here was our original daily extreme, right? Price came down, induced, right? Had a break of structure, and then price eventually came all the way back up to sweep ever so slightly, right, this structure point in order to tap into the POI and then run, right? That is really the only continuation structure setup I will ever trade, right? I'm not a huge continuation trader, right, from a higher time frame perspective, but if you were to be trading those continuations such as this, right, these would be the trades you would be taking. From a diagram standpoint, let's go over it. We went over it before, but here's our higher high, higher low, right? We then make a higher high and then a higher low. We then make a higher high, and what can we notice, right? Higher high, higher low, higher high, higher low. We clearly have failed to mitigate this structure point here. This structure point now becomes inducement to this POI. We also have a break of structure, right? Showing us that bulls have confirmed buyers in the market. So with that being said, as price comes down, wipes out this inducement here, we should expect price to continue. Now, can we have a failed high? So another way of looking at this is we can still have a higher high, lower low, higher high, induced low. And we can also have failed supplier demand, right? So what's happening here is we didn't have a break of structure. A lot of people assume that we always need a break of structure. You don't always need a break of structure. You can have failed supply, but you got to know kind of when to use it, right? How do we know that this is failed supply? We know that this is failed supply if we are shown a rejection candle. All right, so this is when it comes down to price action and candlestick patterns. All right, we need a rejection candle to know we have failed supply. Right, so what are some examples of rejection candles? Right, we have pin bar candles, we have the evening star and or morning star candlestick pattern, and we can also look for bearish or bullish engulfings. Right, these are the three main candlestick patterns that I will use. A lot of people do not teach candlestick patterns, and it confuses me because candlestick patterns are pretty much going to tell you when bulls or bears have taken over the intraday market, right? And you can also use them on the higher time frames as well. These candlestick patterns are basic price action, things that ICT talks about that a lot of people overlook, right? WWA lit, they do not touch on this, right? Why? I couldn't tell you why. I really don't know why, but they are super, super effective when it comes to identifying inducements and failed supply or failed demand in the market, right? We will go over continuous examples of what pin bars are, what evening and morning stars are, and what bearish and bullish engulfing candles are. If you need a brief review, right, just go on Google, type in candlestick patterns, and I'm sure you're going to be able to find something just like this, right? You're going to be able to find what these candlestick patterns are. They're not too difficult. Just to give you a brief overview, right? A bullish engulfing, let's pretend that this is a bearish candle, right? This is coming down. A bullish candle just simply engulfs it. That would be a bullish engulfing, and the bearish engulfing does the opposite. Now, a morning star, let's pretend this is a bullish candle, right? This could be a doge, and then this is a bearish candle engulfing this over here. This would be an example of an evening star, and the morning star is vice versa, the opposite. So coming back to this diagram here, right, we were making higher highs and higher lows, right? As we have failed supply, we have also seen that we have inducement, right, pointing to this POI. So as we come back down, we can still expect what? Price to come up and fire. Not only that, but if that's not enough confirmation, we also have a break of structure right here to show us that price is continuing in a bullish direction. Now let's continue with live examples because I personally learn better with live examples. I know some people like diagrams, which is why I'm drawing them out. I'm trying to meet the needs, of everybody's learning style, how everybody learns. But let's go back into drawing out the structure real time. So as we see here, the daily time frame, we clearly have a bearish market, right? Based on the daily structure points. After I'm done with the daily time frame, I generally move my way in to the 4-hour time frame. Once I'm on the 4-hour time frame, and real quick, let me take off session breaks. Once I'm on the 4-hour time frame, I then look for these structure points here. Very similarly, I will look for my higher highs and then my lower lows, right? After this point here, I've clearly seen that we have taken out these lows and have created lower highs. And I have seen that I've taken these lows out and then took out these 4-hour highs, right? What can I see right here? After this high and this low, the next high that was created was right here, right? It does not seem as if we have made another low as of yet, right? We go from low to high, right? We could theoretically punch this as a low to high, and then of course low to high, right? Then we have here a break a structure as of right here, and then the market in turn on the 4-hour time frame has changed directions. Now I kind of want to show you that is the basic way of drawing out structure. However, what's important to realize is there is a huge difference between external and internal structure, right? This right here, as we can see, is starting to develop internal structure. So how can we find the difference between external and internal structure? What we are primarily going to be looking to do on these time frames is drawing out structure points, right? Each structure point in the market is a form of inducement, right? As simple as that sounds, it is true. We can see on the 4-hour time frame here that as I draw this lines, we can see that anytime price comes out of the line, it induces and then goes the opposite direction, right? We can clearly see that all of these structure points right here that I've just drawn with the support and resistance lines or inducement lines or the external liquidity, right? As we can see, price comes down, sweeps the structure point, comes back up, sweeps the structure point, comes back up, right? Same side on the opposite end of the external liquidity. Sweeps the structure point, comes down, sweeps the structure point, comes down, sweeps the structure point, comes down, right? This is all inducement in the market. Now that we understand how to draw out our external structure, we then need to understand how to draw in our internal structure, because our internal structure is also going to create inducement points in the market. In order to find the internal structure, we need to go to the last point of external structure of where we did not make a lower low before making a higher high. This higher high never had a complete lower low. Why? Because this lower low actually made this high to make this low to make this high, right? This is all internal structure, all based on the 4-hour, right? So in order to do that, I will change my colors, right? I like to have green as my external structure for the 4-hour. I also like to have teal, a lighter blue, as my internal structure for the 4-hour time frame. What is happening? This low makes this high, this low makes this high, this low gets swept, right? A new low is created. I need to find my marker. And then we're back into the pattern of making higher highs, higher lows, and higher highs, right? So how are the internal structure points taken, right? It's the same exact idea. Every single structure point, you want to drag out your inducement and see if price comes to sweep the inducement. We can clearly see off of the most recent price history that price has come to this 4-hour external liquidity, swept it, and started going short. We can see when price comes down to this internal structure point, price swept it, and now price is starting to go what? The opposite direction. So we can tell what? We are not determining direction of the market by understanding that the 4-hour is in a bull market by making higher highs and higher lows. Rather, we are waiting for the market to sweep a structure point, go the opposite direction to tell us that this is now the true direction of the market, right? Liquidity sweeps, right, or sweeps of a structural point and or sweeps of inducements are what's going to determine our bias or direction for the market. Liquidity is king. Structure is not king. However, we need to understand structure, be able to identify structure points in order to identify the true extremes or the true inducements in the market, right? So now that we have an understanding of how to draw structure from an internal to external point of view, right? After I'm done with a 4-hour, marking up different structure points. And here, let me finish marking the rest of these up. We can now see for the future where price needs to sweep in order for price to catalyze a move, right? We know price on the 4-hour needs to sweep here to become bullish. We know price on the 4-hour needs to come sweep here to become bearish, right? This is how we are viewing our structure points. We are not looking for a break of structure for us then to mitigate an extreme, right? Forget your understanding of POIs or anything like that, right? We need to focus on the liquidity sweeps, right? Sweeping these structural points. We have seen that we can identify the external liquidity and the internal liquidity. When the internal liquidity comes to match the external liquidity, right, we can then identify where the market is going to run. Hopefully in the future, you'll see that price will sweep either this high or low, and then price will determine the direction of the market. All right, now that we spent some time doing that, let's move our way into the hourly. On the hour, I usually use orange to mark up my structure points, right? And what I'll do is I'll find my most recent structure point. It was here. We can clearly see that before we had, coming into this, a lower high, a lower low, then a lower high. We have seen what? This got swept, moved the opposite direction, as well as this got swept, moved the opposite direction. However, we can see from a structural standpoint, this lower high made this lower low. This lower low came up, swept these highs, made this higher high into this higher low, into this higher high, into this higher low, and now into this higher high. So we can see what from a structural standpoint. We can see that the hourly clearly had a break of structure here, right? And a break of structure here. But what do we notice about this break of structure? This wasn't really necessarily a break of structure. What happened was this was actually a liquidity sweep into this POI, which caused price to move down, right? So what's going to happen a lot of the time is on the hourly, as we move down in the time frames, is we will have higher highs and higher lows. Sure, we will have a BOS, right? But this is also known as a liquidity sweep in which we might mitigate a POI in the past to come down lower. Now, because we have this liquidity sweep or BOS, sure, it is still probable to take this extreme and then take price the opposite direction, right? So we would be entering in short here and then going long right back here, right, to maintain the direction of the market. What I also want to point out, we still want to drag over our inducements, right? We still need to understand that if price comes and it sweeps any of these levels, we should start looking for reversals, right? If price comes and sweeps here, here, or here, we can expect price to tap in and run. If we miss this, we tap here and run. And if we miss that, our most probable will come from our external liquidity on the 4-hour, and we will see price come in, tap, and run. All this is just pretty much understanding how to draw and structure. If you're a little lost, do not worry, because we're going to still go over continuous examples of this, okay? Once we have identified our hourly structure, we can then move into the 15-minute. On the 15-minute, I'm looking in between this dot and this dot here. I can clearly see that we have made highs. I'll make 15-minute red, into lows here, into highs, into lows, back into these highs here. Now, what have we noticed? What is in between all the 15-minute highs and lows? More structure, right? You could theoretically come in intraday and mark up even more structure, which we will do. But I want to do the same thing again, and I want to mark out all of the structure points, right? All the inducements. Here's another inducement. Another inducement. Break of structure. Another break of structure. So if price were to come all the way back down, I would still expect it to come sweep this structure point and perhaps mitigate something in here. Or I could see it sweep this structure point or this hourly structure point and come mitigate something here. And or sweep this structure point and this structure point and mitigate something here to go higher. All of those are possibilities in the market. Now what's happening is, if we look back, I see that these were once hourly structure points. Which would allow me to see that these highs have the ability to get swept up here and then run. We will then find some sort of reversal around this area here. We can see there's tons of inducement, tons of support. All right, so we will most likely see price come all the way down, sweep, and run again. And then we're going to come all the way back up to this inducement, sweep, and then run. All right, and that is sort of like a little bit of an introduction to algo structure, in which we'll go into more detail about. Now, as we go in to intraday, right, we will see that price has even more structure points. It does get a little bit harder to identify them here. I am going to make these yellow. As you can see, we're still just marking out higher highs and lower lows, right? Back to lower lows, the higher highs, right? Such as here, into this higher high to lower low, higher high to lower low, higher high to lower low. Notice what happens during the session. We've seen that we have not necessarily reacted off of any POI, but our inducements will point to the most correct POI. If we're coming back into this session here, right, we have seen that these were all the main structure points within the intraday session for London, right? As we have moved out of London, the first area of liquidity that we have seen to sweep was actually the Asian highs right here. As we have swept the Asian highs, right, we have seen that price has come back in to tap an OB to move higher, right? But what I want to focus on and show you guys is where price is sweeping. You can see that price has come all the way up, swept liquidity, and has moved the opposite direction. We have then come down to sweep more liquidity and then move the opposite direction. There are ways to enter this, all right? It's not just based on higher time frame and just simply because there is a sweep. We will eventually go into entries and how you can catch these moves once price sweeps liquidity. All this first video is just identifying structure points, okay? All I want you guys to be able to do and to know how to do after this video is understand just how to draw in all your structure points from a high time frame to low time frame view, right? We're not going to go into the 5-minute or 1-minute just yet. The majority of this video is simply just understanding structure from the daily to the 4-hour to the 1-hour to the 15-minute, right? Get very comfortable being able to draw out these structure points, right? Yes, I do use the 15-minute time frame to mark up the intraday structure. As you saw, I came into here, right? And like what I did was I found my hourly structure points. Then in between my hourly structure points, I was marking up lower low, lower lows into lower highs, into lower lows, into lower highs, into lower lows, right? I saw this broke structure into higher highs, higher lows. This looks like consolidation. This becomes higher highs, higher lows, higher highs, higher lows. Keep on doing that. Really get comfortable finding the true highs and lows in the market across all time frames. All right. The more you get better at doing that, the more you're going to be able to find the true inducement and the sweeps in the market. All right. Now that we have gone over pretty much the basics of structure and a little bit of an introduction into liquidity grabs and inducements, let's understand that continuations, yes, are fully based off of the breaker structure, right? And then we need to see price induce and then hit our POY as shown in the beginning. We understand that our reversals are really mainly based off of the higher time frames, right? We can see that as we induce a structure point, price 9 times out of 10 is going to reverse, right? Induce a structure point, 9 times out of 10 is going to reverse. And we see that almost every single time here. Price comes into a structure point, reverses. High time frame structure point, reverses. So that is basically my starting point on how I'm able to identify continuations and reversals strictly based off of the structure. Oh my God, is this going to get even more amazing once I go into liquidity injections, which will be within the next video. So now that we've gone over structure basics, right, and a little bit of advanced structure, a little bit of continuations, a little bit of reversals, let's go over what an imbalance is. Imbalances and wicks. What we need to understand here, that imbalances, in reality, well, they're basically, imbalances are part of price. What does that mean? Imbalances are everywhere, all right? Imbalances are pretty much the only part of price that are not a part of consolidation. What does that mean? If there's imbalances occurring at any point in price, that means price has the ability to do what? Reverse or continue at any time, right? If I come into the candle here, imbalance to me can be any one of these wicks, right? Price has the ability to react off of any of these wicks. Why? Because wicks have rejection. They have OBs within them. Meaning if price simply comes into a wick and mitigates, it has the ability to drop, fall, or rise, right? To give you an example, in my favorite way of introducing imbalances, the way that I teach it and the way that I like for people to understand it is your most powerful OBs come from not only a bullish engulfing, but an imbalance in between them. I'm a big fan of 15-minute OBs, 10-minute OBs, 13-minute OBs, those mid-time frame OBs. Why? They keep a relatively tight stop loss, and they're also pretty accurate and considered to be high time frame, right? So how did these imbalances work? When we look at this candle, you can clearly see that we have made an OB. Why do I love it? I love it because as I look at this OB, right, I see that there is a clear imbalance between this candle and this candle, right? And I'm going to diagram this out for you guys. Exactly like this. Keep in mind this should be a 1, 2, 3, 4 candle count, right? We'll have candle 1 come in. Let's pretend it is bearish, right? Candle 2 come in, bearish. Candle 4, candle 3, bullish. And then candle 4, also bullish. Now, let's bring in the wicks in here. This candle here is going to be candle 1, candle 2, candle 3, and candle 4. We want to identify candle 2 and candle 4. Why? And in this example down here, this will be candle 2, this will be candle 4, right? Let me mark it up, candle 2, candle 4. What do we notice about the wick and the wick here? The wick and the wick here. There is clearly this gap in between it, right? This is a very, very, very powerful imbalance. These are the most powerful imbalances in the market to date, right? Not only is there an imbalance here, there is a massive OB, bullish engulfing OB, right, at the outer extremity of price. So here's our OB, here's our imbalance, telling us that this OB is an extremely valid and powerful OB. Now, what's important to understand here, price does not always need to come tap in to the OB. Simply, price can just come in, tap the imbalance, and run, right? So sometimes while we're placing our positions, we may want to have it 1, 2 pips ahead, just in case price hits the imbalance and runs, right? And or you can risk a tinier position on the imbalance, one position here, and then another position within the POI, right? So hopefully that gives you a little bit more of an understanding of how I'm identifying the true imbalances in the market. Putting it all together, right, we see we have a POI here, a POI there. These POIs both are producing what in the market? Order flow. And we're going to go over order flow here in a little bit, right? Before we were talking about structure making higher highs, higher lows, higher highs, and higher lows, right? Remember I said, while we're trading intraday structure, we don't want to be trading to this extreme. You can clearly see we got stopped out. Why? Because price had to do what? Sweep liquidity. You're probably like, why didn't we mitigate this extreme then? Right? We should have mitigated this extreme and gone up. Well, are we on the outer extremity of price? Are we still inducing a POI? Yes. Notice how this low is also inducing a POI, which we got swept, taken it, and ran. Is this inducing a POI? No. Right? We have clearly mitigated right here onto this POI. There was once an imbalance. Price came in, mitigated the imbalance, mitigated the POI, and had a reaction. Price clearly came back, swept, right, to produce this POI with another imbalance between this candle and this candle, right? We can clearly see that this never had that happen. This never had that happen on the 15-minute, but this OB did. Hopefully that all makes a little bit of sense on how to understand imbalances, right? And how I use imbalances to confirm my OBs. We can now see a little bit on how structure can act as confluence and confirmation to that POI, right? We can clearly see that this structure point is inducing this POI. All right, so now that we understand imbalances a little bit more, let's go into understanding wicks. Now, wicks are OBs. Now, this is something that isn't really shown in most trading communities, but simply, do we need to take an entire OB, such as so? And the answer is no. Simply, if we have massive wicks, like so, these wicks will not only act as a refinement to your OB, but are also considered OBs and imbalances in the market, right? If I go back into time here, right, we can clearly see that these wicks on the bottom were all mitigated, right? These wicks were all mitigated, right? We wouldn't have to take the full OB. We can just simply take the wicks. These wicks will act as a refinement for the most part, and or if price doesn't have an OB with an imbalance, we can take our wick as the OB with an imbalance. For example, we clearly see here that price comes up, we have a bearish candle, and then this candle, right, being candle 2, being candle 3, let's pretend that do the candle count method again. Here is candle 1, candle 2, candle 3, and candle 4. What do we notice? Remember I said between candle 2 and candle 4, there must be an imbalance. Well, luckily, this candle's wick never came up to mitigate this candle's wick, which has OBs in it. Considering that, we can take this candle's wick, drag it over, and what do we notice? Price had to sweep this candle into this OB for price to run, right? This wick. A lot of people are not shown this because this is why people are missing these types of trades, right? We can clearly see over here that these wicks were never mitigated, right? A lot of people were probably buying price around here. When in reality, we should have been buying here. Why is that? This was not your true OB. There was no true imbalance. I only like taking OBs that have an imbalance. These wicks down here were never mitigated, right? They were not mitigated until price came right back into here to mitigate these wicks and run. You will find not only more accuracy by trading with wicks than OBs, but you will find smaller refinements, and you'll even find SLs with 0.5, 0.4 on them, right? Just by trading the wicks of price. You think that's cool? Just wait till we get into the 1 minute, right? And we're trading wicks on the 1 minute. Notice the wick order flow here to a normal OB to a wick here is all just order flow and constantly causing price. Drag it over here to move up, right? Just scrunch it out. Look at the outer extremities of price, right? And just notice the order flow. It's happening all the time, right? We don't need to be so precise with our OBs, right? The market doesn't know what an OB is. It has no clue what an OB is, right? Only we know what an OB is. So hopefully that is a little bit of an introduction to you guys on that. So now that we know what imbalances and wicks are, let's kind of move our way into IFCs and refined IFCs, right? So what is an institutionally funded candle, right? Basically, in my opinion, Institutionally funded candles are those with massive wicks, right? Those that have shown true intent in the market. This right here is an institutionally funded candle, right? Or an IFC. But what I really want to show you today are refined RIFCs, right? All that it basically means is when we're on our 15-minute, right, and we see that we have an OB, such as here in the wicks, we will simply drop onto lower time frames, such as the 5-minute, and look to see on these lower time frames where the last OB was identified. The one in which I could see here with a true imbalance would be right around this area here. This will be the refined version of our POI. Why don't I like refined POIs? Why don't I like going on the 1-minute or 5-minute? What just happened? Well, what just happened was we missed our entry, right? By just maybe 0.1 pips, a couple 0.5 pips, something like that. And we completely missed. The only refined IFCs I like to take are based off of current market structure. So not structure that has happened in the past, but is currently happening in the future. Or currently happening in current time in reality. Here's our tap of our main IFC or POI. Price comes up, we have a bearish engulfing, right? Simply, this bearish engulfing has told me on the 1-minute that the market has changed direction. Now what I'm looking for is simply that 1-minute IFC, that refined RC that has an imbalance. Where is it? Right here, right? Here's that first candle, that first 1-minute candle that clearly has from candle 2 to 4 an imbalance. If we drag that across, you can clearly see that the position rides. Now, notice our 1-minute candle is actually bigger than our 10-minute and 15-minute wick. That is why I'm saying it does not matter if you can understand the 1-minute charts, because you will still get the same refinements and the same SLs on the medium time frames, such as the 10-minute, 13-minute, or 15-minute. All right, so what is the last couple things we need to cover here is institutional versus lower time frame order flow. Now, I did go over this in my YouTube video, right? It's very simple, so I'm not going to spend a lot of time on it. But basically, what is institutional order flow? Institutional order flow is external liquidity order flow, meaning the outside of price is connecting OBs and wicks to each other. We'll see it happening a little bit like so. Prices come in, come down, come in, come down, come in, come down, come in, come down, right? Until there is a break of this external order flow, right? A little break of structure, right? And now we can expect what? More order flow coming from another extreme or the tap here and continue the whole same process again. Tap into more outer order flow, right? For it to tap and then run the opposite way. How are you able to identify this on real time? I will show you. Let's pretend we're looking at the market here, right? Let's mark up all the external structure points on the 4-hour. What is the first thing I noticed? What was the last point of liquidity that was swept? Here, here. The last points that are swept generally can take an OB. Here are all these wicks. This right here made another connected another OB here. How did I draw that in? Remember I said there always must be an imbalance, right? Between these are wicks. So these clearly have an imbalance. Price comes in, mitigates, and runs. I come here. Yes, this had an imbalance from this candle here, but this candle here also had an imbalance to this candle here. So all this is valid. Now, look, we then create more order flow internally, which then extends out to here. This is basically what institutional order flow is. It is just order flow on the outside of price. Now, in order to refine institutional order flow, right, we must hop in to the 5 or 1 minute charts. I personally like the 1 minute charts when finding lower time frame order flow. So how do we find lower time frame order flow? We want to go to where we had the higher time frame order flow, and we want to see how price is reacting within the higher time frame order flow. Seeing that we are clearly mitigating and reacting here, where would my entry be based off of the lower time frames? We want to see price come into the higher time frame order flow. Now, once we have come into the higher time frame order flow, we want to see a liquidity grab or sweep of that first order flow, of that first grab, right? Here would be that first grab. Coming into it, we see structure coming in, but we need to see a change of character, which would have been right here. Once we have seen that change of character, we want to identify the low that caused that high, which would be right here. Coming into that low, we do not need to have an imbalance for our OBs. But simply, we could grab the wicks, such as here, which do have an imbalance, and this OB here, this would be your institutional order, your lower time frame order flow. Now, it doesn't seem that price came back to mitigate here, which is fine. So how would we know to pick up more order flow? Well, after this order flow has established, right, and we had our change of character right here, where was the OB that caused this break of structure? Right here. Now, are we going to take this entry right here? Absolutely not. We're going to wait for price to come up again, right? Have some sort of change of character, which would have happened here, right? So we then need to find the OB that caused this break of structure, which would be right here. It doesn't seem in this example, I am in a random spot. There is no established order flow, so I'd simply have no trades, right? We need price to establish order flow for us to have the most probable position. Let me see if I can find an example of where we might have this. This is actually a good one right here. Here were structure points in the past. We've clearly seen that we've had a break of structure here, right? Where was the OB that caused this break of structure, right? And this break of structure here as well. This OB into this OB established order flow, right? We can clearly see that they have broken structure as of right here. And because of that, it has allowed us to continuously grab buy orders along the flow here, right? We're simply finding the OB that broke structure, right? And seeing how it chained order flow on it. And if price keeps tapping into the flow, right, we should continuously get buys. Given, why did this invalidate? And I'm going to show you why. Why did this invalidate? Because where did we have our break of structure? Right here. So where was the OB that caused the break of structure? Right here. But did we have order flow? No. So we knew not to continue buying. We knew to continue buying here because these OBs caused this break of structure. Right? In reality, we wouldn't have known order flow established until this here. Our true entry would have been this right here. If you want to see a little bit more on order flow, higher time frame, lower time frame order flow, it is not really a main part of my strategy, right? We actually have not gone into really the main parts of my strategy. This is all just normal SMC review, understanding breaks of structures, liquidity grabs, how to draw in structure basics, right? This is nothing crazy yet, right? I just wanted to make sure I got a video on some review of SMC, a little bit of review of order flow, imbalances and wicks. If you didn't really understand the majority of this, that's okay. This is not the primary part of my strategy. We're going to go over constant examples of my strategy. This is just like a little introduction for those who need a little bit of review on just what order flow is, what structure is, just identifying highs and lows, right? The differences between continuations and reversals. And, you know, I will touch on Wyckoff eventually. I don't want to do it on this video because this video is getting a little long. But hopefully this was a little bit of a review on POIs, just what a POI is, how to draw proper POIs with the proper imbalance. The biggest takeaway from this video is simply just how to draw higher highs, higher lows, and how to draw in POIs that have an imbalance on the 15-minute charts. Those should be the two biggest takeaways from this video, because those will come into play a little later, right? So really practice understanding those structure points, really understanding how wicks come into play, because we're going to see that a lot, and really how to identify those imbalances, right? Especially on the 15-minute time frame, right? Where I'm coming in and we need to identify these POIs, such as these that clearly have what? An imbalance like this in between it. That is really your biggest takeaway, I would say. That and identifying just higher highs, higher lows. We know that this has broken structure, right, for this to continue. Like I said, we're going to have many, many videos on this. All right, so if you feel a little lost, don't worry. I'm going to constantly review this, right? It's not like I'm producing one video and you're done, right? I'm going to have so many videos coming out. So yeah, hopefully you guys enjoyed this, understood a little bit more of structure and the structure basics of structure. I will see you guys in the next video.